Sébastien Helin, Head of Asset Management at TNI. I am joined by Devier Arora, Analyst, to comment on MENA markets. December was a tough month across MENA markets. The S&P Pan-Arab Index has lost 1.6% during the month and more than 17% during the year. In Saudi Arabia, the largest equity market in the region, the Tadawul Index has lost 4.5%, the worst performance across MENA markets. To explain this performance, we have some external factors such as the fall of oil prices. The Brent quality has reached $37 per barrel, the lowest price for the year. At the same time, there are some internal factors such as the Saudi budget, the long expected Saudi budget, which was disclosed in December. Devier, can you share some light on this factor?
Saudi government announced its 2016 budget, which is mainly focused towards fiscal consolidation measures to reduce the budget deficit to $87 billion from $98 billion in 2015. In 2015, the budget deficit was around 15% of the GDP, which was below the market expectations of around 20%. The budgeted spending this year is reduced to around $224 billion, which is 14% below the actual spending of 2015 and 2% below the budgeted spending of 2015. The revenues are budgeted to be around $137 billion, which is 16% below the actual revenues of 2015.
And beyond the budget, we heard also some news related to subsidies and fiscal consolidation.
Yes.
What are your takes on that?
Saudi government cut the subsidies across the board. Prices for fuel, electricity and water were increased. Ethane and methane, which are the key feedstocks for the petrochemical and cement producers, their prices were increased by 133% and 67% respectively. Prices of retail gasoline was increased by an average of around 59%. This is considered as the biggest shakeup of economic policy in the recent history. A medium-term fiscal consolidation plan was announced, which include privatization of state assets, adoption of VAT, which is in line with the GCC, and review of subsidies further over the next few years, and also to put excise duty on tobacco.
In Egypt, another big market in the region, have seen very strong performance in December, the best performance across the region. The market was up more than 10% during the period. We have seen some monetary policy decisions during the month. What are your thoughts on that?
Investors welcome the key steps taken by the new central bank governor. Central bank increased the interest rate to mitigate inflation. The central bank also addressed the FX-related issues by clearing the backlog of foreign investors, which was around $547 million. The central bank also injected the liquidity into the banking system to address the importers' backlog by around 25%.
In the UAE, Abu Dhabi has recorded the best performance across GCC markets. The Abu Dhabi index was up 1.7%, supported by the banking sector.
Actually, the banking stocks in Abu Dhabi, they witnessed a bounce back during the month. As we remember, last month they had a big sell-off, which was linked to MSCI rebalancing, and also there was investor concern regarding the tightening liquidity in the system. But this month we saw good moves in the names like ADCB, FGB and NBAD.
Thank you very much, Devier. Thank you very much for your time.